You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 7/22/21. Well, you've probably been, if you're like me, looking for investments with better returns than the 0% you're getting on your savings account, or maybe you're getting 0.25% if you're a preferred customer of the bank. What are you to do? Well, you're about to hear an option, and before you go all crazy on me, just hear the person out. But I'm curious to find out what you're doing in this low-rate environment, how you're finding investments that will give you the return you need in terms of cash flow, in terms of appreciation, all these things. Right now, Charlotte Dunford is with us, and Charlotte, your company is Johns Creek Capital. You're the managing partner, and you have kind of a unique real estate investment slant, don't you?
Yes, it's definitely a niche for sure.
Yeah, so
compared with other options.
So tell us what you're doing here.
Sure, absolutely. So, hello, everybody. My name is Charlotte Dunford. I am a managing partner at Johns Creek Capital. A little bit background on myself. I am a deal sponsor at Johns Creek Capital. So just before we go into Johns Creek Capital, I am based in Johns Creek, Georgia, hence where the name came from. So I finished college here in Atlanta at Georgia Institute of Technology with a major in business administration, I think 4 years ago. And shortly after graduation, I started working for a corporate job as a business analyst. At the same time, I picked up real estate investing on the side. I started with a single family home in the south of Atlanta as my first property. And then that went into I started from that and then got into duplex. And then by the time I quit my job to do real estate investment and private equity full time, I had the very little savings saved up from my job, and then the very little, I guess, the little portfolio that I had to launch a venture, majoring in multifamily. That was my original vision. But as I explored deeper into this niche, I realized that the market environment for multifamily was way too competitive for any new person to get into the space, and the cap rates that we're looking at was at 3 to 4%, and that's in my opinion that was not much better than the CD or any kind of savings account, and then you have to take on all the risk. And I was exploring options to. I took a pretty big jump from my corporate job to launching my own business, and as I was trying to get into the multifamily apartment building market, and it was way too competitive, and then which pressed the cap rate down, which was yielding the return that is pretty much unrealistic for a private equity firm. So I was doing a ton of research and testing different waters as far as which category of things would be kind of a blue ocean strategy, meaning that there are not that many players in the market yet, and that means that we can move quickly and then get a bigger piece of the pie in the market. So and then that came, I guess mobile home park really appealed to me because it is not a traditional sense of real estate. It's not just buying a single family home or duplex like I did, or triplex or whatever, multifamily, and rent it out. It's most similar to a parking lot. So you're pretty much renting on dirt and renting on land. So that really appealed to me. And this model that of higher room for rent increase because mobile home park lot rents are averaging at $200 per month is drastically different, and there's a huge gap between that and the national average for apartment lot rents and the rent and the monthly expenses to rent a house or have your own mortgage and loan on it. So that creates a ton of demand in markets with solid fundamentals such as economics, housing vacancy below the national average. So with those research in mind and with the solid foundation that we believe in mobile home parks, so that's where Johns Creek Capital came about. We started with, I personally started with one mobile home park here in Georgia. That's 30 lots in South Georgia, and another one in Illinois. And then things, I think we were scaling pretty quickly and getting investor interest and scaling pretty quickly from there. So today, Johns Creek Capital has 20 parks under management, and we have more than 3.9 million investor capital under management. And I think for us, the model of mobile home parks, and it is a unique, financial model of higher room to increase rent, which means higher profit margin and the lower price to purchase for now, and it is increasing in price quickly. So that really appealed to us, and that's why we're in this niche.
All right. So, of course, no interview would be complete when we're talking about mobile home parks without us discussing the less than savory reputation that they have. What's been your experience with your tenants and with these parks in general?
Yeah. So I think I think the reputation and the stigma, I would say, associated with mobile home parks is, there's a reason for that. But I think here's my take on it. You'll have good tenants, you'll have bad tenants. And we see those tenants in mobile home parks more like stakeholders in a company, not just tenants. So we manage them. We want to keep good tenants, and as much as we want to keep good stakeholders in a company. So would you want your business to have bad stakeholders and people who don't have good morals, who don't pay stuff on time, who do not participate in a productive way? Of course not. So we want our tenants to be good stakeholder. That sometimes requires, kicking some people out and getting good people in, and that's a process. And I think the key to business success is to be willing to do and to have the strategies to do things that others aren't willing or are not able to, are not capable to do so. So I think I don't want to use the word dealing with, but I think managing mobile home park tenants is one of those abilities that many would be afraid to go into the space. But I think everything takes practice, right? So over the course of our company, I think we started in early 2020. So we're a quite young company, and we've had a ton of experience managing our tenants, and we know how to interact with them. And I think most of the tenants at mobile home parks, their education level is usually around 6th or 5th grade. That's on average, a lot of them are at that education level. So when we communicate with them, we want to make sure that we use verbiage and use, language to communicate in an effective way in the language that they can understand and we can understand, and everybody be on the same page with. I think that's key. And some people may find it challenging. I think most people may find it challenging to manage people, anybody to manage or communicate with people who are from a very vastly different background. And for us, it all boils down to understanding what their understanding is, and how to keep the good ones and bad ones. And I think that's important. The tenants are, mobile home parking especially are more important than an apartment tenant. with an apartment tenant, they don't own the apartment. They can move out anytime, and they don't really create that much of a lasting impact for your business. But with mobile home park, because they own the home, only rents the lot. And mobile home parks, the mobile homes are anything but mobile, as we know that, it costs thousands of dollars to move a mobile home. So most mobile homes inside a mobile home park do not ever make it out of the park. So with that said, we do want to make sure that we have good tenant, base, and we do, we want to become advocates for the tenants, and don't assume that someone is bad or because of reputation. Just be strategic in your communications and provide good programs to assist your tenants to be their advocate and to help them, and to work on their relationship. And at the end of the day, I think I personally see the stigma or reputation as a sort of advantage, because if you can handle a type of challenge like this, and I think that's where the real pot of gold is.
So if you have your choice, either to have a mobile home park or to own real estate in what we would call a combat zone, war zone, which is better?
Well, I definitely, in my biased opinion, I think mobile home parks are definitely better than a war zone. I know what you're talking. The first property that I owned really in South Atlanta was kind of, on the edge of war zone. So I had firsthand experience of that. So I think in a war zone, what a war zone is really, it's unsafe. It may have health risks. It has crimes, and the fundamentals of the market is not there. But in a mobile home park, there are mobile home park and war zones, and you definitely want to avoid those. But I think, as with any real estate, it has war zones and it has, blooming markets. And I think within the mobile home park niche, there are certain criteria that you have to stick to make sure that it's not a mobile home park war zone. And, just because it's a mobile home park doesn't mean that it's a war zone. There are certainly mobile home park Taj Mahals out there, and that those are the ones that you want to get into. So I definitely wouldn't. I definitely would choose mobile home park over the war zone, because with the war zone, you don't have the fundamentals. I think I keep emphasizing on that word, fundamentals, is because that's important. What is the housing vacancy rate in that market? And what is, if it is way above national average, then that should make you think twice. And what is, call the police department during your due diligence. And we have an entire rigorous due diligence process and our own acquisition proprietary algorithm to acquire deals at prime locations with strong fundamentals, and it usually has an opportunity to add value. And carried out by a solid business plan. And we have rigorous property management standards and a conservative exit strategy. So when you choose properties, make sure that you have your own standards. And for us, the standards are, include some basic, but not limited to. We have a very complicated kind of system to filter out good and bad mobile home park acquisitions. And some major things that we look at is, the unemployment rate locally, and the gap between the mobile home park lot rent and what it costs to live at this park versus what the local other housing products would cost. Say if it takes about $1,300 to rent an apartment locally, and then 2 streets down the road is your mobile home park that you're looking to purchase. And if the lot rent is only $200, then you've got a big gap, and your product becomes more valuable, because if you can offer just as much or slightly, smaller rooms or homes, mobile homes, then you are competitive in that market as far as the value of the housing product you're offering. So I think definitely the war zone, there's war zone in every single real estate asset. But I think as far as overall value goes, and mobile home parks are, our goal is to create good quality of living and to make that American dream come true, to fulfill the American dream of home ownership. So I think that's definitely, drastically different.
Interesting. So obviously, the stereotypes in some places are right, and in other places they're not so right. So as far as returns go, what type of cap rates are we looking at? What type of cash on cash returns?
Don't just survive, thrive. The Financial Survival Network.
FPX Nickel is developing the large-scale Dakar Nickel District in central British Columbia. Within the district is FPX Nickel's PEA stage Baptiste nickel deposit, which is projected to be among the world's top 10 largest nickel mines by annual output. The Baptiste deposit has the potential for the lowest quartile operating costs at just $2.74 per pound. And compared to recent global nickel mines, the project requires a low capex. FPX is also commencing its first ever drill program at its Van target in the Dakar Nickel District. Surface samples have indicated that the Van target footprint is larger in scale and 10 to 15% higher in grade than Baptiste. FPX Nickel trades in Canada as FPX and on the OTC under FPOCF. To learn more, go to fpxnickel.com. That's fpxnickel.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, so as far as the cap rate goes, I think in 2019 into 2020, the cap rates for mobile home parks were on the higher side. I think the ones that we were looking at was at 10%, 9%, sometimes even higher. So, and then as we entered into 2021, as the COVID pandemic, really got heated and things have been crazy with that, a lot of investors are really getting into this, niche and realizing that this is very much, I wouldn't say recession proof, but it's definitely recession resistant asset class. So the cap rate has been pushed down. And another reason is that the interest rates have been going down. And a lot of investors look at, and that's what we look at as well, is the spread between the cap rate and the interest rate. We will need at least a 3 to 4 points spread between, what the cap rate is of an asset and what the interest rate we're acquiring it at. So I think the general cap rate right now is 8% and lower. It depends on your location. And as far as returns, I think for our structure, that we offer a 8% preferred rate of return. And then it would be cascading waterfall structure from there, splitting at 70-30, 60-40, and it jumps to a different rate of return, from there. And I think overall internal rate of return with the purchasing the right asset, fulfilling our requirement for acquisition, you'll be looking at anywhere from 15% to 20%. And obviously it depends on the type of the project. And all of the 20 parks that we have, not all of them are light value add. And some of them are development projects, which yields a higher return than the other light value add. But larger, yeah, go ahead.
But it's hard to develop these mobile home parks because of the stereotypes, because communities view it as a black eye. They don't want it. And that can be difficult, can it?
Mm-hmm. Yeah, I think that's where operators like us come in, is that the cities usually don't like it for a couple of reasons. One is, like you mentioned, that it's an eyesore. They don't like seeing it. That's because a lot of owners, they used to be mom and pop owners, and they don't take care of the parks, and they don't raise rent, and they kind of run their business into the ground. And for us, operators take over. We really do a lot of value add cosmetically, which is a value add for the city. And then the city sees it as something that would help them from a kind of a city, scenery perspective, and also from tax perspective. And I think the biggest obstacle to, park development or even park infilling, so that's what we do is, in development projects, we infill the park with homes, is the biggest obstacle in any kind of process is obtaining the permits and licenses necessary for the city to approve the move. And that's the hardest part. And once you bypass that, there's not much. I think that takes a lot of working with the city to make sure that they see your vision. And that's what we do, is that we talk to them and we present our vision to them. This is what we plan to do with the park, and this is how you can benefit from it. And, the city, you can have a discussion, because this is, essentially, this is an affordable housing business. And we're providing an affordable housing option to good people and fulfill the American dream of home ownership. And that is something that most cities need across the country. There is the housing crisis is universal in the entire nation, in every single state. So in most cities, I would say. So, and some cities are worse than the others. And I think if you could propose this vision to the city and work with them, and you can find out during due diligence what their attitudes. It's okay if they don't like your idea. It's okay if you don't like the mobile home park, as long as it's legal and that you make cosmetic upgrades, you buy a good quality asset. And I think difficulties are there, but I think what's more important is that how do you work with it, and how do you turn that into a business opportunity, and to materialize on later on. So I think there are always going to be challenges, and the biggest part is zoning. But I think with the proper plan and the proper conversations. And then just do your homework. I think that would be, solvable, definitely. But something to keep in mind is that the more difficult something is, the higher potential for profit.
Right, which makes complete sense. And because of community opposition to these places, there's not a lot of new ones going up. Obviously,
yes.
None.
And, exactly. Yes, so, it's very difficult. It's very difficult to get it. It is a pretty expensive adventure endeavor to do that. And I think you have to develop the infrastructure, and so that's why that's not our main focus. Our main focus is to buy an existing park and conduct value-add activities to make it a better place for tenants to live, and infill to increase occupancy, raise rent to increase the net operating income of the park. And for developers, I would say that it's pretty difficult, but it's doable. And when we say development, a lot of times means that a lot of infilling, putting the homes on empty lots, and I think refine and improve our infrastructure at the park. That's our goal. And that's, I think, the most cost-effective and most profitable way to conduct this. And I think the important thing to do is to, get on the city's good side, get on the community's good side. And, if this thing is not an eyesore and it provides benefits for the local residents and for the local communities, get on their good side and they will work for you, and they would be your advocate and you would be their advocate. I think that way that creates a win-win situation.
All right. So as far as you go, Jones Creek, you're taking on investors. You have funds available?
Yes, so we currently do not have a fund, but that is our goal for late 2020. Yeah, but we are taking on investors to partner, participate as limited partners. They will provide capital to acquire the properties, and then they will receive monthly distributions. We distribute monthly. I know a lot of other firms distribute quarterly, but I think one of the products that we deliver is the monthly income for a lot of retirees to live on, and for them getting a monthly check that's important. So we do monthly distributions, and also with those with this asset class, it provides attractive tax benefits when it comes to tax time, and the overall returns that are much higher than general investments vehicles such as CDs, mutual funds, REITs, and stock market, which is very volatile. Sure. So I think it is a recession-resistant asset with low to moderate risk levels based on the acquisition itself. It provides a relatively safe haven for retirement funds and money to invest in if you want to participate in real estate. Compared with other asset classes in real estate, this option is definitely more, more, I would say, on the safer side, and delivers a pretty attractive return compared with other vehicles for sure.
All right. Well, it's really fascinating. People want to get in touch with you, Charlotte, find out more about those opportunities. Where's the best place to connect?
Yeah, I think the best place to reach me and to find out more about what we do and who we are is to visit our website at www.johnscreekcapital.com. And also you can email me at cdunford@johnscreekcapital.com.
Excellent. And we'll have a link in the show notes to Jones Creek Capital's website, so you can just click through and contact Charlotte. And if you got any questions, just send me an email. We'll get them over to her. The email address is kl@kerrylutz.com. And while you're there, sign up for our free newsletter, financialsurvivalnetwork.com. Charlotte, been a pleasure. Good luck. And we'll see how many more parks you can acquire in the next couple of years.
Let's see. Thank you very much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.